This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on August the 20th, 2015. Our time is 8:47 Mountain. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. To speak with him personally and privately about investing in hard assets, 1-800-432-1022. 1-800-432-1022, our featured diamond of the week. And this is a stunner, a .62 carat shield cut. Yes, like Superman's shield, fancy, vivid, yellow, internally flawless. This is a one-of-a-kind diamond you must see at rarecoloreddiamonds.com, featured diamond of the week. You can see video of it there. But it is amazing. A shield cut, .62 carat, and that is a fancy, vivid, yellow, internally flawless. We'll talk more about it later in the show. Don't forget, if you ever miss a radio show, we have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. The show is portable. We go anywhere you do. The shows are streaming at your convenience 24/7 at HESradio.com. and rarecoloreddiamonds.com if you ever miss us. This week, we saw some ramifications from what happened in China with them devaluing the yuan. In Vietnam and Kazakhstan, they devalued their currencies as a result to compete. In fact, in Kazakhstan, their currency was down close to 25%. They did it to compete against the yuan devaluation. In Venezuela, their currency is to a point now, if you can believe it, and we have this story in our free weekly newsletter. You can get it from Harold at rarecoloreddiamonds.com or 1-800-432-1022. The currency is worthless. In fact, people are using it as a napkin, if you can believe it. The Fed rate rise, will it come down in September the way people are expecting? Well, with what's happening in the world financially, we're starting to see economies roll over. As a percentage, it's down from 44 to 38% that they will actually raise rates in September, the Fed in the United States, that due to what's happening financially around the world here in the last week or so. The Greek bailout has been approved by the EU and Germany. Greece still needs to come through, and there are concerns that they may not. Puerto Rico needs $400 million in short-term money, which they think they can get from the marketplace, which, as I was saying to Harold before the show, is going to be rather interesting. When you say you're not paying back any money and they're in default as it is, how do you go and borrow more money when you've already told those same people, we're not paying you back? Good luck with trying to get $400 million, Puerto Rico. And this week in gold and silver, Harold, we saw gold and silver continue to appreciate in value. That due to the fact that we saw the U.S. dollar drop down a little bit, but from the standpoint of gold and silver appreciating, a lot of it had to do to a great extent a race to the bottom in currencies. And this is why we've said for a long time, have hard assets, gold, silver, diamonds in your portfolio, because paper assets, as is the case with currencies, you can see what governments are doing. They are debasing them on an everyday basis. And you're in a situation where it's a race to the bottom. You need an asset in your portfolio that's going to maintain your value. And Harold, we believe diamonds, gold, and silver will do that.
Yes, it's, again, gold and silver, you don't want to trade. You want to own it. You want to hold it because of all the things that you just mentioned. Inflation in Venezuela is unbelievable. I mean, their currency is basically valueless. So, you know, you're talking about inflation there that is so high that nobody can afford to even live. You can't afford to buy bread or food or anything like that. Everything is done through the black market, and the currency market there is abysmal. But that also happened in Russia. It happened in Iran. It happened in North Korea. Anytime that there's sanctions brought against countries like that and they have no income, you're going to see massive inflation. Now, what's happening in the markets right now is almost unprecedented, but once all the dust settles and you really realize what's going on, gold rallied very, very strong this week. Gold rallied from a low of 1,080 that we saw 2 weeks ago, which there was very heavy support, so it's going to take something to push it through 1,080, and we still believe that gold is going to drop to 1,000. Now, I must have had 40 phone calls this week from clients asking if this rally in gold is meaning that we saw the bottom and the market's going to go substantially higher. And I got to say no at this particular point, because the thing is that there's a direct correlation between gold and the U.S. dollar. And the U.S. dollar isn't backing off. In actual fact, it's important that we all understand that when countries are debasing or lowering their currencies, they're lowering it against the strong currency, which is the U.S. dollar, which is the reserve currency. So if all these countries' currencies are getting weaker and weaker and weaker, they're getting weaker against the U.S. dollar. So don't let this rally in gold and silver fool you at this particular point. We're in a very thinly traded market. It's the end of the summertime, basically. So really the trading is very, very light. People are starting to get back from vacation because the kids got to go to school. And the fact is that you're in a very lightly traded market. And the fact is that it's not unusual at this point. In fact, if you go back to the charts and look almost every year at this particular time, you'll see a rally coming in gold and silver. However, there's still tremendous volatility, and unless we feel that the U.S. dollar is all of a sudden going to fall substantially, which we don't, that means to me that the gold market is going to fall, and it's more than likely going to hit the $1,000 level that we predicted. Now, the other thing about it is that the U.S. dollar will continue to strengthen, and if the Federal Reserve does raise interest rates in September, even if it's a small amount, it's going to strengthen the U.S. dollar. So, again, in my opinion, I see that gold is rallying at this point for two reasons. One, because it's a seasonal trade, and the trading is very, very light at this particular point. Number two, the U.S. dollar has not broken down in any way. In fact, one day this week we hit it at 98 cents. Right now it's trading at 96.17. So, again, that's part of the reason that we saw a 2-cent pullback on profit taking in the U.S. dollar. But the other thing is that China and India are not major buyers of gold right now. So that means that the demand for the market is not overly high, which again would mean that the gold market should fall off based on that. So if the problems that they're having in China right now with their stock market, with devaluing their currency 2 times in 1 week, and then you take into consideration that they're not buying as much gold at this point because they have financial difficulties, again, it tells me that the gold market is going to drop again. And again, one other thing that you really have to understand is that the banks like JP Morgan that are shorting the gold market, that have these massive short positions in the market, if there's no liquidity in the market, that means if there's no buyers in the marketplace, then they can't sell off their positions when the time is right. So this makes sense to me that banks like JP Morgan that have been manipulating the gold market will rally the gold market like they're doing right now. I've seen this happen many, many times over the last 15 years. They rally the market. They give people the indication that the market is now taking off. People feel that it's time to jump in, so the general public, who always buys at the wrong time, jumps back into the market, and then they drop the market again by selling off their positions. So, again, don't let this rally in gold and silver fool you at this point, because, again, as long as the U.S. dollar is strong, there is no way in the world that gold is going to break out. So, again, I do anticipate the gold will sell off again, only on the short term. I'm very, very bullish longer term and intermediate term on gold. It's not that far away from the bottom. Again, we predicted 1,000, we hit 1,080, which is not too shabby, but I do definitely feel that with the shorts in the market, there's a very large short position in gold and silver. I know how these banks trade. We've seen this happen many times. They try to get the general public back involved in the market, which they're doing at this time, and then they're going to sell the market off again. Unless the U.S. dollar is all of a sudden going to fall, which I don't see happening at this point, because the U.S. economy, no matter how many problems it has, is better than almost every other economy out there. There was also an article in the newsletter this week about the Canadian dollar at an 11-year low, and they actually called it one of the most hated currencies, and I couldn't understand that. I mean, the fact is that the Canadian dollar is directly tied in to the commodities market. We always talked about the correlation between oil and the Canadian dollar, but don't forget, Canada also raises cattle and are farmers, and and everything. So commodities is a major part, obviously, of the Canadian economy. And with the Canadian dollar at 11-year low, it's only because commodity prices are low. Now, we've also said that over the short term that the crude oil market was going to continue to fall is down to $40 at this point. The reason that we said this is, number one, because of the sanctions being lifted against Iran, and now with Iran pumping oil and Iraq pumping oil, it's just adding a lot more oil onto a market that's already saturated with oil. So because you've got economies right now that are not doing well, oil, there's a huge abundance of it. And with the last thing in the world we needed was for Iran and Iraq to start pumping, huge amounts of oil back onto the market, because Saudi Arabia is doing the same thing. So as lower oil prices happen, that's also going to push the Canadian dollar lower. So again, unfortunately, and there's no way that I'm trashing the Canadian dollar or the Canadian economy in any way. I'm Canadian, born and raised and proud to be. So again, I'm only broadcasting at this particular point that there is issues with the Canadian dollar. There's a reason it's at an 11-year low. Now again, a weak Canadian dollar makes exports that much more attractive. But again, as Canadians, if you want to travel, you're really going to notice the huge difference in the weakness of the Canadian dollar. If you go to the United States and you wanted $1,000 US, it would cost you 1,300 Canadian. That's how much the Canadian dollar has fallen over the last 2 years. On the other hand, my clients that have invested in diamonds over the last 10 years, forget about how much your diamonds have gone up. They've gone up 30% just on the currency alone. That's why diamonds are such a phenomenal investment when there's currency devaluations, because diamonds could be sold in U.S. dollars, British pounds, Swiss francs, which are all stronger than every other currency. That's why we recommended this to you 10 years ago. That's why my clients are invested in it, and that's why it remains today as one of the great investments. And we're going to see over the next 5 to 10 years, it's a longer-term investment, that this will turn out to be one of the greatest investments our clients have ever made. I'm very excited about what's happening in the hard and alternative asset market. We in no way, shape, or form trust the paper assets at all. There's a huge difference between paper, gold, and silver, like futures contracts and ETFs, and the actual physical metal. We only recommend the physical metal. We recommend that you own it outright. Don't finance it. Don't leverage it. Don't do anything like that. Own the metal, because there's going to be a day in the foreseeable near future that gold and silver are just going to skyrocket. There's shortages in the market. We know that because the Canadian and American mints are not minting silver coins because there's no silver. How does the price of silver drop when there's no physical silver available? It defies all logic and all that we know about economics. When there's a high demand for a product and there's a low supply, the price always goes up, except if it's gold and silver, because it's manipulated by the bank. So again, we want to be able to buy physical gold, physical silver. Don't finance it, don't leverage it, own it outright, keep it on you. There's going to be a time within the very, very near future, as volatile as these markets are, that they're just going to take off and run. But we've got to see a lower price before that happens, and I'm pretty sure we're going to see close to $1,000 as the low of this market. Right now, you're also looking that the Dow has dropped substantially. I think the high in the Dow that we saw was 18,500. We're now down to 17,145. We're down another 203 points on the day. The TSX, the Toronto Stock Exchange, down another 150 points today at 13,885. And the thing is, at this point, is that the Dow should be substantially lower than where it is, even though it's dropped almost 1,500 points. In my opinion, the Dow should be probably trading down at around 9,000 or 10,000. That would be a truer reflection of what the U.S. economy is really like at this point, because things are not great here in the States. I'm a Canadian living in the United States. Believe me, the economy is bad. The rich are rich and the poor are getting very, very poor. The restaurants are not as busy. Retail sales are down. There's no way in the world that it's reflective of an 18,000 Dow. So, again, we anticipate a large drop in the Dow coming, even though we know that the Dow is manipulated. And with the Chinese stock market falling as heavily as it did, we really should see the Dow have dropped off 3,000 or 4,000 points, not just the 1,500 points that we saw. So, again, it seems that all countries are manipulating at this point. We're going to sit back and watch it transpire. I think we're sitting pretty right now. If we're sitting with physical gold that we're not trading, you've got diamonds, you've got the type of assets that are under the radar, that are not paper, that cannot be manipulated, we're going to come out of this doing extremely well. I'm very enthused and excited about the near future. But again, before that happens, we've got to see the markets do certain things, and according to my calculations, gold's got to come down to close to 1,000 before it's going to go higher, and that's totally reflective by the U.S. dollar.
RareColoredDiamonds.com featured diamond of the week, a 0.62 carat, and this is one of the most spectacular diamonds you will ever see in your lifetime, because it is a very rare museum-quality shield cut. Fancy, vivid, yellow, internally flawless. That's right, a shield. And if you're wondering what it looks like, go to RareColoredDiamonds.com right now, click on Featured Diamond of the Week, and you will see a picture of it there. It is stunning. A 0.62 carat, shield cut, fancy, vivid, yellow, internally flawless. We'll talk more about diamonds as the radio show continues. Connect with Harold at RareColoredDiamonds.com or 1-800-432-1022. That's 1-800-432-1022 to learn more about investing in hard assets, diamonds, gold, and silver. Richard Russell is in his early 90s now and lives in San Diego, California. He has been writing the Dow Theory letters for over 60 years. And we have a quote in our free weekly newsletter. Get our free weekly newsletter from Harold. The Chinese devaluation of the yuan, in my official opinion, really marks the beginning of the currency wars. Every nation desires a cheaper currency to aid in its exports. The U.S. dollar is already considered overpriced. This places the Fed in a dilemma. If they raise short rates for the first time in years, and the dollar will become more overpriced than ever. Exports will be hurt. It will also be very interesting to see if the Fed has the courage to raise rates this year or next. If the Fed does raise rates, my guess is it will be a very small boost. The Fed, by literally announcing a rate raise, has placed itself in an incredible box. He also says gold is a sworn enemy of the Federal Reserve, unlike with fiat paper money. And the Fed cannot produce more gold with the tap of a computer, nor can the Fed reduce the supply of gold when it wants to. So, to my mind, the greatest negative for gold is that it cannot provide the most powerful bullish force in the market, which is compounding. Since gold produces no dividends, holding gold does not allow for compounding. However, gold shines during a booming bear market. Unlike a stock like General Electric, gold cannot drop to zero. Even in a bear market, an ounce of gold, regardless of inflation or deflation, always has value. Silver and gold constitute pure wealth. That, according to Richard Russell. You can see those quotes in our free weekly newsletter. If you'd like to get our free weekly newsletter, speak with Harold, RareColoredDiamonds.com or 1-800-432-1022. One of our top stories this week. Doomsday clock for global market crash strikes 1 minute to midnight as central banks lose control. China and their currency devaluation signals an endgame, leaving equity markets free to collapse under the weight of impossible expectations. When the banking crisis crippled global markets 7 years ago, central bankers stepped in as lenders of last resort. And they go on to say that private sector loans were moved onto the public sector balance sheet, and vast money printing gave the global economy room to heal. Time is now rapidly running out. From China to Brazil, the central banks have lost control, and at the same time, the global economy is grinding to a halt. It's only a matter of time before the stock markets collapse under the weight of their lofty expectations and record valuations. If you'd like to read this full story, Doomsday Clock for the Global Markets Crash Strikes 1 minute to midnight, call Harold and get our free weekly newsletter, 1-800-432-1022. Also, you can connect with Harold at RareColoredDiamonds.com. RareColoredDiamonds.com. One of the other stories that I think is very important this week, and Harold, we have about 3 minutes left in our segment here in the first half of the show. The United States lacks the ammo for the next economic crisis. Policymakers worry fiscal and monetary tools to battle a recession are in short supply as the United States economic expansion ages and clouds gather overseas. Policymakers worry about recession. Their concern isn't that a downturn is imminent, but whether they will have the firepower to fight one when it does arrive. Money has been Washington's primary weapon in the decade since British economist John Maynard Keynes proposed aggressive government spending to battle the Great Depression. The U.S. generally injects cash into the economy through interest rate cuts, tax cuts, or ramped up federal spending. Those tools could hardly be employed when the next dip comes. Interest rates are near zero, and fiscal stimulus plans could be hampered by high levels of government debt and the prospect of growing budget deficits to cover entitlement spendings by, obviously, the government on retiring baby boomers. Few economists believe the United States is near recession. The economy seems to have regained its footing after a first-quarter stumble, and Federal Reserve officials are considering whether to raise short-term rates for the first time in nearly a decade to ensure the economy doesn't overheat. Even so, looming threats are a reminder that the slow-growth global economy is just a shock away from peril. They go on to say Japan's economy contracted in the second quarter, and Europe is recording lackluster growth. China's slowdown, meanwhile, appears more severe than global policymakers initially realized, and a currency devaluation there might spur trade frictions. With the United States expansion entering its 7th year, policymakers are planning on how to respond to the next downturn, which history shows is inevitable. The current expansion is now 16 months longer than the average since World War II, and none has lasted longer than a decade. The world economy, and this is an amazing quote, Harold, the world economy is like an ocean liner without lifeboats. That according to economists at Hong Kong Shanghai Bank. They wrote that in a recent research note. The world economy is like an ocean liner without lifeboats. And Harold, we have about 30 seconds left in our segment here, and I agree with them 100%.
Well, so do I. Again, the risks in the marketplace are severe, and that's why we're saying at this point to basically get rid of all the risk in the marketplace right now. If you're sitting very heavily in stocks, that's not a good place to be. Bonds are not even a good place to be. Commodities are at their low. You've really got to, know when to take, the risk off of the table and sit on the sidelines. And right now is the time. I mean, there's no country that is doing well in the marketplace. So what chance does the small investor have? The fact is that I'm very proud of the radio show because we've directed our clients into the right investments at the right time. Diamonds, gold, silver, physical assets, alternative assets are definitely the smart way to go to be, have all of your money in the risky stock market. You're going to find, just like in 2008 and 1999, we're going to have severe repercussions. So please be smart about it at this point. Take your risk off the table and wait for the right time to strike. We want our clients and listeners to our radio show to do well. And again, at this point, we're very confident in our recommendations.
Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 20th, 2015. If you ever miss a radio show, the shows are streaming live, 24/7, archived at HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on radio. You'll find us there. We go on any portable device you have. We're portable. We go anywhere you do. Connect with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com. He has an open invitation to speak personally and privately with any of our radio listeners about their financial situation. You can call him at 1-800-432-1022, 1-800-432-1022. 1022. Our featured diamond of the week from rarecolorediamonds.com. Go to the website right now. If you've never seen a shield-cut diamond, you will see a museum piece from rarecolorediamonds.com. Featured diamond of the week, a .62 carat shield-cut, fancy, vivid, yellow, internally flawless. This is absolutely stunning. You'll find this is really the rarest of the rare. And we have information in our free weekly newsletter this week about the Tiffany yellow diamond, and Graph unveiling a spectacular 132 carat golden Empress fancy yellow diamond. And we have some breaking news from rarecolorediamonds.com. Harold has just received an information via email. Harold, breaking news. We have 2 yellows that are museum quality, and you're saying these diamonds are so rare, these yellows.
You better believe it. In actual fact, in my entire career in the diamond business, we've only seen maybe 3 or 4 of these particular types of diamonds. So, just received, and they've just been cut, a 2.01 carat and a 2.29 carat cushion cut, fancy, deep yellow flawless diamond. So they're both over 2 carats. So you understand that to get a diamond over 2 carats is extremely rare. First of all, only 1 diamond in 15 million is over 2 carats, and I can assure you none of them are of the type that I just described. So the way that GIA actually grades diamonds, you never buy a diamond that is not graded by the Gemological Institute of America in New York. So anytime you buy a diamond, it should have a full grading report that tells you everything about the diamond. It tells you the carat weight. In this case, one is 2 carats, 201, and the other is 229. Then it tells you the cut. In this case, it's a cushion cut. And then it tells you the color, which is a deep yellow. Now, the fact is that you'll never see a deep yellow diamond. They're very, very rare. It's very seldom that GIA will ever grade a diamond as deep. Now, the way that they grade the higher quality diamonds is that fancy yellow is known as a canary diamond. I love those. They're a softer yellow. My wife wears them all the time. Her 14 karat flawless is a canary diamond. Then the next intensity is fancy intense. And they're a little bit more expensive because the more deeper saturation of color, the more expensive the diamond is. So after intense comes deep. Now again, in my career, I've only seen maybe 3 or 4 deep yellow flawless diamonds. So in my opinion, these are as rare, if not more rare, than a vivid because the fact you see so few of them. And then this is also, the clarity on this diamond is flawless. So you're talking the best of the very best. You'll never see diamonds like this available. And what we've been doing for the last month is allowing our Canadian clients to buy diamonds in Canadian dollars. And the reason that we do that is that the Canadian dollar has obviously fallen by 30% against the U.S. dollar. I've traded commodities and currencies and gold and metals and oil and all that for most of my career. Because I'm in the diamond business and diamonds are priced in U.S. dollars, we hedge the Canadian and American dollar. And I've had this hedge on, for over a year now. So because we ship a lot of diamonds to Canada and we had some very large diamond sales going to Canada, I had a major hedge on with the Canadian American dollar, and I over-hedged the position, and we made a lot of money. I could keep the money, but what I decided to do was to allow our Canadian clients a tremendous opportunity to buy diamonds in Canadian dollars. And what this will do is this will put you in profits on your diamonds by 30% as soon as you buy them. The second you take delivery of these diamonds, you're up 30% because of the currency alone. And because we're involved in currency wars all over the world, and the U.S. dollar is going to gain strength further from where it is, you'll only make a tremendous amount of money on the currency and on the rarity of these diamonds. There's only 2 of them, a 201 and a 229. They're both cushion cuts. Believe me, these diamonds will be gone by Monday or Tuesday. We get a tremendous response when these type of situations happen and we feature a diamond. Now, this week we have a featured diamond that is extremely rare. It's a shield cut. It looks like Superman's cape, and it's vivid yellow and flawless. So you now learned about 3 yellow diamonds that are beyond rare. A 201, a 229, both cushion cut, fancy deep yellow flawless diamonds. You'll never see diamonds like this again. On a collector's scale, these are a 10 out of 10. And then the feature diamond this week is the same way. You will never see a shield cut, vivid yellow flawless diamond. It looks just like Superman's cape, and the color is spectacular. You know, the beautiful thing is that as currencies wars heat up all over the world, diamonds become more attractive. We've got several clients now from China that have been buying very substantial diamonds from us because of the devaluation of their currency last week and the fact that they were not able to get their positions out of the stock market. That frightens anybody with money. When you cannot sell your positions, when the government is intervening into the markets, manipulating the markets, and not letting people sell out of stocks where you own more than 5% ownership, that's a totally manipulated market, and it's a massive concern. There's a ton of money in China. And a lot of those clients are now coming and putting that money into rare diamonds because, again, rare colored diamonds never lose their value, unlike a currency and every other asset. They cannot be manipulated in the sense that stocks and other paper assets are. They're portable private wealth. You could leave your country and go start all over somewhere else. And just think about the people in Venezuela. Their currency is now worth nothing. If the good people of Venezuela had diamonds, and those that do have diamonds, all they need to do is leave and sell those diamonds. And now they're back in business again. They've got instant cash. It doesn't matter how much they made on it. All they've got is instant money again, and you cannot do that with any other asset. You cannot cross a border with more than $5,000 in cash. You cannot cross a border with a stock portfolio in your briefcase or physical gold. There's no monetary vehicle that you can cross a border with aside from a diamond. And I'm not saying to smuggle. I'm saying you can take your diamond, you can have your ownership receipt with you, and you can cross any border. They're only going to want to know that when you come back into the country, do you still have that asset? Some people are leaving the country and never coming back again. So, you know, the fact is that what's happening to the people of China right now is shocking. Not only did their stock market plummet 30% in 2 weeks, and everybody was leveraged and lost all their money, but on top of that now, they've manipulated the stock market. Anybody with money cannot sell out, and then on top of that, your currency was devalued twice in 1 week. If that's not frightening, I don't know what is. That's why the Chinese are now starting to buy diamonds, putting assets away that the government doesn't know about. And the fact is, it's happening in Europe. It happened in Greece. The good people of Greece, if they had a diamond, they could have left to Switzerland or Germany or wherever and sold that diamond and been back in business again. And that's why this is so important, because capital preservation, keeping your money right now, is the most important thing. It's paramount. Don't lose your money. You can't make it back again. It's very difficult to do that. On top of that, diamonds give you preservation of capital, and then they give you capital that's going to increase in value, because diamonds never decrease in value, and right now certain diamonds are hitting levels that nobody ever expected. So the fact is that now is the time, if you're not already in this investment, to get involved, and I'm going to make it very simple for you. Pay in Canadian dollars. You're going to make 30% right off the bat, and the only reason I can do that is because I was lucky enough, some people say smart enough, but I say lucky enough, to have hedged the Canadian and American dollar, and it worked out extremely well for us, and we're going to pass those winnings over to our Canadian clients. So again, you're going to be able to buy our diamonds in Canadian dollars, and you'll be 30% in profit on the currency the second you take possession of them. We ship these diamonds directly to you, and again, not only do we have an amazing featured diamond that is ridiculously rare, a diamond you'll never see anywhere else, but now we just found out that we just got from GIA a 201 and a 229 cushion cut, deep yellow flawless diamond, and both of them will be priced in Canadian dollars. The other amazing investment in diamonds, aside from yellows right now, are green diamonds. Green diamonds are ridiculously rare, going through the roof in price, and again, are so exciting because, again, most people not only didn't know that diamonds come in green, but never have seen a green diamond. And they are spectacular, and they're becoming the go-to diamonds now, just like blues that have gone up over 1,000%. We're expecting the same thing with green diamonds, and we've got some beautiful, beautiful diamonds that came in from Central America and South America, where they come from. On top of that, there's no doubt that the Argyle pink diamonds are going to make a fortune for our clients. They're in very, very limited supply. The Argyle mine is in Western Australia. They produce 95% of the world's pink diamonds, which is only about 200 carats a year. It's about to close down in less than 5 years. If you own an Argyle pink diamond, depending on the color of it, you can make anywhere from 300, 400, 500% to 1,000% or more. There will not be hardly any pink diamonds left after the Argyle mine closes. And again, you can buy any of our Argyle pink diamonds in Canadian dollars, which means that you're going to save 30% right off the go. And again, it's paramount to us that our clients continue to do well, and there's no doubt that the most amount of money at this point is going to be made over the longer term in the diamond market. If it's a matter of retirement funds, I would much rather own a diamond for 10 years than have my money in a mutual fund. You will not make money in the stock market, but you'll make a ton of money in the diamond market. $100,000 in an Argyle pink today could be worth $500,000 to you within the next 5 to 7 years. I know it sounds impossible, but it's happened before, and these are the type of assets that make those type of returns. I've mentioned many times on the show before that 50 years ago, my wife's girlfriend's grandmother bought a pink diamond, a 5-carat pink diamond for $50,000. That diamond is worth $5 million today. A diamond, and I'm just telling you a few instances, but a 2-carat vivid purplish pink Argyle tender diamond that I bought in 2003 for $350,000 is now worth almost $4 million. So the longer you put these diamonds away, the more and more they go up in value. And then you watch the currency markets. We own our own auction business. We can sell your diamonds at auction in England for British pounds, or Switzerland for Swiss francs, or whatever currency is the best. Right now, you want to own diamonds in U.S. dollars. And we're going to be able to sell to you, because of our hedge that we put on the Canadian-American dollar, you can buy any of our diamonds in Canadian funds for the short term. We cannot continue this forever, but again, we want to make certain that our Canadian clients are well taken care of, and this is one way to do it.
Featured Diamond of the Week. And if you have never seen a shield cut, go right now to rarecolorediamonds.com, Featured Diamond of the Week. You'll see video of it on Harold's website. It's a .62 carat shield cut, fancy, vivid, yellow, internally flawless. This is a museum piece and something that you could turn into an amazing jewelry piece with the help of Harold and rarecolorediamonds.com. Go to rarecolorediamonds.com or speak with Harold personally and privately. 1-800-432-1022, 1-800-432-1022. One of the world's greatest yellow diamonds is the Tiffany yellow diamond. And the Tiffany yellow diamond is one of the largest yellow diamonds ever discovered. Its carat weight is 287.42 carats in the rough when discovered in 1878 in the Kimberley mine in South Africa, and was cut into a cushion shape of 128.54 carats with 82 facets, 24 more than a traditional round brilliant to maximize its brilliance. It was discovered in South Africa in 1877. The stone was purchased by New York jeweler Charles Tiffany. His gemologist, George Frederick Kuntz, studied the gem for a year, 1 year before beginning to cut it, reducing it from 287 to its current size. The cutting was carried out in Paris, and the amazing part was Kuntz was only 23 years old at the time. It was later mounted by Jean Schlumberger. The diamond is known to have been worn by only 2 women in its lifetime. It was worn by Mrs. Sheldon Whitehouse at the 1957 Tiffany Ball held in Newport, Rhode Island, mounted for the occasion in a necklace of white diamonds. It was subsequently worn by Audrey Hepburn in 1961 in publicity photos for Breakfast at Tiffany's. And in 2012, it was the 175th anniversary of the Tiffany Yellow Diamond, and it was put in a new setting. And you can see that picture in our free weekly newsletter. Get our free weekly newsletter from Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. But this is a must-see featured diamond this week, a .62 carat, shield cut, fancy, vivid, yellow, internally flawless. And Harold, it is so rare to see a shield cut, and I would imagine, we're talking about Mr. Kuntz spending a year to cut the Tiffany yellow diamond. I would imagine the planning on a shield cut would be very extensive.
It certainly is, and there's very few shield cut diamonds that have ever been cut. But one of the most famous, I believe it's a shield or a trillion, one of the two, very close to it, is for one of the largest reds, the 5-carat Moussauf red that's in London at this point here. So, again, just very, very rare diamonds. When you hold a diamond like this in your hand, it's like nothing you've ever experienced before. One of the things I love most about my business is the fact that I get to play with these magnificent pieces. So, again, we've got some very rare diamonds. It's a great time to invest in diamonds. It's probably one of the best investments you'll ever make. They're very, very rare. They never go down in value. And with the way things are going at this point, you want to own some diamonds in your portfolio. Things are just way too risky out there right now. So we love the featured diamond, the vivid yellow, which is the highest saturation. Again, vivid yellows are generally the most expensive of all yellow diamonds because they're the highest saturated. But on top of that, the two diamonds that I recommended, you'll never, ever get a chance to own diamonds like this. I can assure you, by Monday morning, these diamonds will be gone. So hopefully, those that are interested will get this information quickly because, again, the chances of ever owning a diamond like this are slim to next to none. And both of these are over 2 carats. They're fancy, deep yellows, and they're internally flawless. They're beyond rare.
Connect with Harold, rarecoloreddiamonds.com. rarecoloreddiamonds.com, or call, and the telephone number, this is a must-have number, 1-800-4, and this is a number, write it down right now so you have it at hand, 1-800-432-1022, 1-800-432-1022, and Harold's website is rarecoloreddiamonds.com. Ask about those two diamonds and our shield cut, which is the featured diamond. If you take a look at diamonds for the long term, there are 5 compelling reasons to invest. Privacy. Obviously, it's one of those assets that if you don't tell anyone, no one knows that you have it. The portability aspect, real estate in your pocket. Estate planning. We hear about diamonds being handed down from generation to generation. As Harold was touching on, great price stability. We saw that during the financial crisis with rare colored diamonds, and good long-term growth. At a minimum, we're seeing that diamonds, rare colored diamonds, they're growing at about 10 to 15% a year. So you have privacy, portability, estate planning, price stability, and great long-term growth. And then you add to it something that is even very, very important, and that is obviously the wearability, and it's an investment at the same time, and the rarity. And Harold, with a shield cut that we're offering as the featured diamond this week, you have something that is so rare. If a person was to invest in this, really it's going to be a situation where you're really one of the only people on the planet with a shield cut that's a yellow, vivid yellow, internally flawless, because they just do not exist.
You're 100% right. So between the featured diamond and the two diamonds that I mentioned, they all fall into that same category. They are so ridiculously rare that you will never, ever get a chance to see diamonds like this again. So it's not for everybody. These diamonds are all priced now in Canadian dollars. That means that you're going to be 30% ahead as soon as you buy one and invest in it. And again, all of my clients that own diamonds are ecstatic over the fact that they now see the benefits of owning it, and it's all because of the currency. Again, putting aside how much the diamond would have already gone up in value, the fact is you made 30% just on your currency alone, and that's very substantial. To make 1 or 2% on your money in a year by keeping your money in the bank is what most people are getting. So to be able to make 15, 20, 30% on your money is a true rarity, and that is available for our clients right now in the diamond market.
One of the other diamonds you can read about in our free weekly newsletter, and this is something that came out this year. Graf unveiled a spectacular 132-carat Golden Empress, fancy yellow diamond. Graf Diamonds just released images of it. We have pictures of it in our free weekly newsletter. And they have obviously had some of the world's greatest diamonds graphed. The latest catch is being called the Golden Empress, and it's a 132.55 carat fancy, intense, cushion-cut yellow diamond. The diamond is set on a necklace with approximately 30 other yellow diamonds. I'm looking at the picture right now. It is absolutely amazing. Fancy yellow-colored diamonds are very popular as not only an adornment, but as an investment because of their beauty and rarity. Only 1 in 10,000 diamonds discovered are classified as fancy colored, so it's even rarer to find one in a particular color, such as a yellow. Lawrence Graf, the founder of the international luxury diamond company and jewelry firm that bears his name, purchased the 299-carat rough diamond that created the Golden Empress. It was unearthed from the Letsing mine in the tiny southern African kingdom of Lesotho. And this is just a beautiful, beautiful yellow diamond. They've created a beautiful diamond necklace with the big chunky diamond, yellow diamond on the bottom, and yellow diamonds make up the necklace itself. Must see. If you'd like to see it, get our free weekly newsletter from Harold. And you can connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022, 1-800-432-1022, and ask Harold about our featured diamond of the week, a 0.62 carat, and this is a shield cut, fancy, vivid, yellow, internally flawless. A museum piece, the rarest of the rare. And Harold, even to add to that, you received an email here during our show where we have two, and as you said, they will go quickly, 2 diamonds that have come into your possession that are yellows that are some of the rarest in the world.
You bet. And it appears that almost all the news coming out right now is on very rare yellow diamonds as great investments. So, again, these are what we're bringing to you also. We actually cut and polish most of the yellow flawless diamonds in the world through my partners. And the fact is that yellow flawless diamonds increase by at least 15% a year, and the ones that we're showing to you now are just ridiculously rare. They're fancy deeps. They're both over 2 carats. They're flawless. You'll never see diamonds like this again, and we're pricing them in Canadian dollars because we hedge the Canadian-American dollar, and we're going to pass the savings on to our clients, which means that as soon as you buy one of these diamonds, you're up by 30%, and that's a true rarity in today's marketplace.
I think one of the top quotes that we had in our free weekly newsletter was from HSBC Bank, Hong Kong Shanghai Bank. They wrote in a research note, "The world economy is like an ocean liner without lifeboats." And that is because, yes, maybe the U.S. economy is chugging along, but we're seeing around the world with China and their currency devaluation, Japan's economy contracted, Europe really in chaos with what's happening over there. Very, very high unemployment, youth unemployment 50%, adult unemployment around 25%. The situation with Greece really has been solved for the short term, but a lot of people believe that there's no way they can live up to the debt payments that they need to make. So this will continue on for quite some time. And when we're seeing Vietnam and Kazakhstan devalue their currencies along with China, and we know the Canadian dollar is down about 25%. We're feeling it here in Canada. Now is a time for hard assets. And Harold, we have about 30 seconds left, but an amazing offer from rarecoloreddiamonds.com to make an investment in rare colored diamonds in Canadian dollars.
Well, again, all we want is for our listeners and our clients to do well, and this is one way to get it done. Some lucky people are going to get 3 amazing diamonds over the weekend. I hope you're one of them. Again, there's a 201. There's 2 magnificent, fancy, deep, yellow, flawless diamonds available, both over 2 carats. And then on top of that, the featured diamond, which is the shield cut, fancy, vivid yellow, Well, all three are amazing diamonds, and again, we're going to sell them all in Canadian dollars.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
If you're interested in investing in those rare colored diamonds, speak with Harold, personally, privately, rarecoloreddiamonds.com or 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.